Little backstory with me of HMOs was I'm a remote investor, as I explained before. I started investing. I bought a piece of land, as I said. That was a disaster in the end. I lost thousands and thousands on that. I've not even figured out exactly what I lost on that because I don't think my ego can handle the exact amount. Views and thoughts on HMOs, please. So I'm Harvey, I'm a remote property investor, and this is the All About Property live show every Saturday. OS has approved this, is approved by OS to do a live show dedicated for All About Property group. And it's about either stuff that's going to help you in your business and your property journey or your mindset, or about a high engagement post from in this community. So each week I look through and try and get out a post that's high engagement and something I could bring my views and opinions. Remember guys, a little disclaimer, these are only my views and my opinions on these things. So I'll look through and have a little look through and try and share with you my views and thoughts on this. So the question's an interesting one. Should you go for HMOs or stick with single lets? And single lets are ultimately the unsexy part of property, aren't they? You know, a lot of people don't talk about single lets too much, and it's like there's always a new strategy out, like, and there's always a new abbreviation out, like the D2SA or the R2. D2SA. There's lots of them, and I can't keep up with them. I even made up one myself as a bit of a joke, which is seeming to get a bit of momentum though. I've made my own one, which is RBRR, which is Remote Buy Refurb Remortgage. But back to the subject. Are HMOs really worth it? I think I can nail this one. I'm going to really give myself a big mantle to live up to. I think I'm going to proper nail this and give you the bang on answer here. But what's your thoughts, guys? So guys, what are your thoughts and views on this? I'll give you my view on this in a little while. As I said, I think I'll nail this and tell you exactly the right answer to this. I know that's a big claim and a bold claim, but I think I'm going to be able to nail that. Joseph, if you can jump on and let me know your views. Should you go for HMOs? Without a shadow of doubt, anything you do in life, there will be trade-offs for what you're doing. And generally, the higher the reward, the bigger the trade-off for it. That's a general rule of things, you know. You get the odd exception to the rule of anything like you do in life. You get the odd person that eats bacon sandwiches every morning and fry-ups and drinks beer every day, and they stay skinny. I've got a friend like it, and it's like, how does that happen? You always get an exception of a rule, but the general rule behind it, the more something's rewarding, the more effort that goes into that. So you've got to work out them trade-offs, you know. So HMOs are definitely more complicated than single lets, and the advice from Wayne is fantastic. Cutting your teeth and getting an understanding of single lets first really helps you to bridge that gap up to HMOs. So the more money and reward it's in, it's like the stock market. The bigger the reward on the stock, the riskier it is. And the same with betting. The bigger the odds, the more you win, but the more you can lose, you know. So and the shorter the odds, well, like single lets are like your odds, are like your 2 to 1s. They're not the big odds. They're not going to give you massive wins, but they're going to give you consistent wins, you know. So you've always got to weigh that up, especially at the start of your journey. It's understanding that consistent win at the start of your journey to understand getting it right, because you don't want to make too big of mistakes at the start of your journey that stops your journey, because it discourages you. Like the first deal I ever done in property was a piece of land, and I was intending to build 2 3-bedroom houses on this, so semi-detached 2 3-bedroom houses. And my ambition way outweighed my skill set at the time. But lucky enough, I didn't find that out until I'd already built up. Like I've already bought like a handful of single lets when I found out, oh wow, that wasn't the right move for me. And I lost a lot of money on that, but luckily I'd already done other deals in between. But if I'd lost that money straight off and hadn't done them other deals, it might have just stopped me in my tracks. So also, especially when you're starting out, you've got to put this into consideration, that you don't want to do something that's so challenging that puts you off. You need a challenge in life that's just out of your comfort zone. So it's challenging enough that you can't do it easy, but not so challenging so it overwhelms you and makes you give up. But I've got HMOs, by the way, guys, so I thought I'd put that out there. I've got commercial conversion building, commercial building, done title splits, HMOs, not done a new build yet, but ultimately I have got a mix of all. So I'm coming here with a background of a mixed. Morning OS, I'd love to see your views on this, OS. What's your views on HMOs opposed to single lets? I want to try and get some of you giving us your views. Kemi, how you doing today? Try and get some of your views on this and your points, and then I'll give you my point of view with this. But as I said, what you've always got to, before you think about anything, is the trade-offs of it. HMOs can be much more rewarding financially, but they are much more complicated to understand. It's even the regulations, all the stuff that goes into a HMO is a lot more managing. You're managing people basically, and separate people, you know, so people that don't know each other. So you've got to understand there can be frictions. One of my HMOs at the moment, we've got one tenant in there that's causing friction between the others, and our best tenant in now is secretly speaking to our manager saying, I'm going to move out if we don't do something about this. But then we're stuck in a position because it's 6-month rent. He's on a payment plan at the moment as well, so he fell behind on his rent in COVID, and he's paying it up now, and he's not, I don't even think he's paying full rent yet at the moment, but he's paying, and yeah, he's being a pain. He's disrupting the whole house, you know. So these are the things you've got to think about when you're going into a HMO. What a lot of people think about when going into HMOs is they go, wow, you can earn £1,000 or £1,500 per property per month. Fantastic, sign me up, give me loads. And that was me included. Little backstory with me in HMOs was I'm a remote investor, as I explained before. I started investing. I bought a piece of land, as I said. That was a disaster in the end. I lost thousands on that. I've not even figured out exactly what I lost on that, because I don't think my ego can handle the exact amount. So I've just settled at, I think it's about 9k, but realistically it's probably 10 to 15. But as I said, my ego, because it's under that 10k mark, my ego can just about handle that. But I've lost on that. But then I've done a flat in Southend, which was the breaker for me to understand in remote investing. I then done another house in Tilbury, and then I met a guy from North, and I started doing single lets, and I've done them full buy, refurbish, remortgage. Done my first 3, worked brilliantly. I got sidetracked on a little venture on a coffee shop, which was meant to give me more money to buy these single lets, was working great in my remote location, but it done the opposite and really dug me in a bit of a hole, and I was in a financial position where I didn't buy any properties for 2 years and put me in a real deep hole financially. But when I bounced back from it, which the land helped in the end, because I sold the land, got a bit out of the financial positions, had a bit of money to get going again. When I got going again, I was in a bit of a dilemma, because I went along to some trainings and everybody was saying about this hour myth, only invest within an hour. And I knew, like, single lets don't work where I live, you know, they're just not working. I can't afford them. So I done a course with, I hope I'm allowed to say it, the HMO Daddy and Mark Homer on HMOs. I then went and done a course on, I didn't want to really do rent to rents, but I went and done some training with Francis Doley, because I liked his systems in the background. He had some plugins that went straight into your business. When you find a trainer, if they can give you plugins like templates of welcome packs and things like that, this saves you so much time. And I looked at all the plugins he had, and I was like, wow, that's the time to put them together is worth it. And the course was really good. Even though I didn't go down the rent to rent model, I wanted to understand his HMO model. And I thought, okay, let's do HMOs. Just forget that I should be invested within an hour. Because I said the first properties I bought with zero education. Made a mistake on the piece of land. The first flat I bought was a bit of a mistake as well, and a bit of a bad location. I didn't realise that. But then I bought the ones an hour away, and they was all running well. But as I said, I then got influenced by all these influencers. I started going to network events, and everybody's saying within an hour. So I thought, okay, better do HMOs. Done my first HMO, and to be fair, the hassle that went into it, I'm not detailed. So the hassle that got into the fire doors and the regulation and dealing with a HMO officer and all the regs with that, it was really dragging me down. It took a long time, it took a lot of money. And as I said, then I got the realisation, I want to go back to single lets, and I'm going back to the North. It can work. But it really took a bigger effort. And then when we're managing tenants, it took me years. Even though I'd done the training, it took me years to get that running correctly, because again, knowing and implementing are very, very two different things. So you can know all the strategy to do something, but getting that implemented takes some time sometimes, you know. So you've got to understand that with the trade-off. So we had massive ups and downs and problems with my HMOs, because even though I knew what to do, getting them systems implemented and run consistently and reliably was very, very hard, you know. And you can say find yourself a property manager, or you could say, do you know what, let's go and JV with somebody who's experienced at HMOs. But finding that right person is difficult. I call it qualify, disqualify. Anybody you work with, whether it's a property manager, a builder, a boyfriend or girlfriend, anybody that a human being is involved with, a solicitor, accountant, doctor, you've got to qualify, disqualify, and get the right qualified people to make sure they're correct. And yet to this day, have I met anybody in any trade, whether they're a mechanic, a builder, as I said, accountant, a solicitor, nobody admits when they're no good. They don't like to admit it. When they're not doing a good job, well, 9 out of 10 people still can't admit that and think they are good, you know? So yeah, it's difficult finding the right people. So it's not as easy as outsourcing it to a manager, because some of the managers could be poor at managing it for you. So you don't get the desired result you want, or you might JV with somebody and you might not get that desired result. But 100% I agree with that. I think it's a double-edged sword. You've got to understand the trade-offs, and you've got to understand what you probably got to go through. Daniel Priestley calls it, you go for a little desert. You have to go through a little stage of getting to grips with it, where you could be potentially losing a little bit before you actually get it right. And that's what I did. And I probably done that longer than some people would, because I didn't give it enough focus and energy, and I was off buying my singlets again. But this is why singlets are great. They're a good foundation. Exactly what George is asking the question with. They're average income. But again, it seems like the unsexy part. But if you've got a good solid foundation, if you've got 10, 20 singlets giving you like £300 a month, and you've got, let's say, 6k a month coming in. Not let's say less than that. Let's say you've got 5k a month coming in from 20 singlets. And then account for your voyage, you've got 4k coming in, and your maintenance, you've got 4k coming in, which is quite conservative. You've then got that 4k income. So when you're doing your first HMO and you're working it out and you're going through these robust processes, as Jonathan was saying, you've got that buffer there that supports that. And that's most definitely what supported my ones while I was going through that. George has jumped on. I've been thinking of HMOs for a while now. Thank you, George, for the inspiration for this live. A great question. He said, I've been thinking for HMOs for a while now, but experienced landlords I've spoke to have said avoid them. So right, let's start getting into my views whether you should or shouldn't do it. I feel it's all about your property why. I feel there's massive, the quality of your questions are the quality of your results and your life, basically. And the quality of the questions you ask yourself and you ask other people is massive on that. And that question was a fantastic question. But there's some key little indicators in there, without knowing too much about your circumstances, George. There's some key indicators in there that said you enjoy the passively style income from that. So yes, you could find a property manager. Yes, you could find a JV to do them with, but finding them, again, good people in anything are few and further between. So if you can find one that's really good and you've got a really stringent qualified disqualified process and you can outsource that part of it, then it's worth doing. But if you're going to do it yourself, the things that you've indicated to me at the moment, you like the passiveness style from it, maybe might not be worth the trade-off, you know. So my answer, as I said, I'm going to give everybody the right answer here, 100%. And it's a probably what's the word for it? It's a sit on the fence kind of answer, and I apologise for the clickbaity sort of style to that. But the right answer is find out what and I call it your property why is. Why are you getting into property? What do you want from it? Understand what results and what lifestyle you want from it. That's where you start from. And George, you've already indicated to me that you want some freedom and passive income. So if you're going to manage HMOs yourself, and especially at the start before you get robust systems and processes in, which will take a while, it's a bugbear of mine when people say, especially in the rent-to-rent sector, say, look, just hire a property manager and then the one deal can pay for your property manager that then frees you out of it. It's not as easy as that. Yes, it does work like that, but it'll take a while for you to understand the systems, to understand what your property manager's got to do. Then you've got to manage that manager. But you need to have an understanding of how to manage people first. And there's a skill to that, and it takes time to understand that. So yes, it works, but I've been on both ends of the spectrum with that. I heard that concept when I was going around to these network events and these seminars and these trainings, and I rushed into that and I hired people and outsourced it, and I knew what to outsource to them. So I said, look, this is what we need to do. We need to do this process, that process, that process. Then I left them getting on with it because I didn't understand how to manage, I didn't understand how to hire people. So there's a whole bigger perspective that comes with that. Yes, is that worth it? Yes, because for me, my property why, for what I wanted to do this with, is I like to live on my own terms, but I understand there's a trade-off in between now to get to that. So that's my why. So understanding what your why is, what do you want from it? So if you want time and freedom from it and passive income, HMOs are probably not for you unless you find that good property manager or good JV partner. But then you really got to have a stringent process of finding them. But if you like a venture and challenge and things, because again, the whole refurb and everything to it is much more complicated. So if you like these things, then HMOs might be for you because you like the enjoyment of that. But you remember, managing tenants, and we've got this one at the moment, it's disrupting the whole house, you know, especially with the COVID like situation. One of them's already, our best tenant's already threatening to leave, you know, so once he leaves and somebody else thinks, oh, he's gone, I'm off as well, then yeah, it has a balance. But also another thing to put in consideration with HMOs is I feel we've got to a bit of a saturation point. This is my view on it. So you've got to make sure you're in an area that's got enough demand still for them, because loads and loads of them popped up, you know. And co-living, some people say, will COVID affect co-living? I don't think it will in the right places. I feel there's always going to be a demand for it, but the competition's getting higher and higher and higher. So this is how I worked it out in my area. So I'm a remote property investor. And initially I've got a couple of HMOs and I got sucked into that, okay, this is bigger money from them. But then I didn't manage them correctly, so it wasn't really bigger money from them. It was just a bit more of a headache for pretty much the same money in the end. By the time I paid people and had the hassles and the voids and the turnover and the extra maintenance, initially I didn't earn more money from it. It took me quite a lot of years. I was slow on this, by the way. Some people could do this quicker. They focused on it a bit sharper than I did. But I was spreading my focus too thinly at the time. But ultimately, it took me quite a few years to get understanding, but also then I've done the math in my head. So I remote property invest, and this is what works for me. And again, it's about finding out what works for you and what your purpose is behind it. So I then figured out, okay, in my location, if I bought a house for 70k, which is worth 100k, and I turned it into a HMO, today's world, you need to be like standing out from that. There's so many rooms on the market. I feel standard, substandard houses are not really standing out. Some do in some areas, depending on your area, but in general, I think you need to be doing a little bit to it. You can't just put fire doors on, fire alarms in there, throw beds in there. You need to address it and do a bit to it. So a typical HMO could cost you, I could buy it for 70k, could cost me 30k to renovate it, put some en suites in there, and 30k. That's quite conservative. Some of my friends are spending 100k on a 3-bedroom house, converting it and going above and beyond and making them super light boutique places. But let's say you spent 30k on this house, this northern house. So I've got 70k purchase price. It's worth 100k, but now I'm at the bricks and mortar value. So a lot of people then go down the commercial value route. So I'm at the bricks and mortar value. I was thinking about this commercial value route, but I like to look at the downside of anything. So always look, are you comfortable with the downside before you go into these sort of things? So I'm not comfortable lending above the bricks and mortar value in case something goes, say there's massive regulation, like government's attacking the private rented sector, and it's not a vote loser and it's a tax winner. So like things like individually council tax in each room, which is getting thrown about a lot, which could come in, especially now the government's printed loads of money, they need to reclaim some, could come in, like the licensing on every properties and things like this. All these things incrementally eat into your margin. So I like to know, if I've done a HMO, that I can turn it back to a single let and it still works. If you lend above the bricks and mortar value and you've got commercial lending on that, that could potentially, or most often cases, stop that from working as a single let. You couldn't convert that back and turn it into a single let. Look in this situation now, there's a lot of old HMOs, especially in my location where there's students HMOs, I've turned them back into single lets because they're just empty. So I like to know I could turn it back into a single let and still earn money. But then I started doing the math. So if I bought this house for 70k and I spent 30k on it and my legals, let's say I needed 55, maybe 60k to round it off to purchase this house. For the same 60k, I could potentially buy 3 single lets, you know, in that same area. And then with them 3 single lets, let's say I earned 250 from each one, that's 750 a month. I might be earning £1,000 from that HMO. And let's make it even sexier for the HMO. Let's say I'm earning double, £1,500 a month from the HMO if it's fully tenanted, or if there's no, like if it's fully tenanted. So I'm earning double, but that's a short-term thing. I can refinance probably, because as I said, I have 100k in there. So let's go down the commercial finance route, which I'm not that comfortable with, which a lot of lenders won't do to a lot of newbie people as well. You have to be quite experienced in relationship with the banks for that. But let's say I didn't, and I've just lent back my 70k, like the 100k bricks and mortar value to keep me in my comfort zone. As I said, everybody's individual. If I lend against that, I've pulled my deposit back out, and that's it. Where with these 3 single lets, not in today's world, but in general, where I've been throughout I've been remote invested for 8 years. In general, I can refinance most of my money back out then. So yeah, fair enough. I've only got half the value of the HMO, but I've got less than half of the hassle of the management. So then with that same money, I could then, with the money refinanced out, within maybe a year, I've got the same income from a single lets as I've got from a HMO without the hassle from it. You know, because I bought, refinanced and remortgaged and carried on buying. So it's a little bit slower to get to that same income point, but I've got there. And there's another great example. So one of the investors I work with, he had an apartment in Essex, in Purfleet, and he sold that apartment for, I think, £280,000, something along them lines. And he had, before I started work with him, he had the mindset of paying it down. So he bought it a long time ago, so he experienced a lot of capital growth. He paid down a lot of the mortgage as well, so he had a very small mortgage on it. So he sold that house, and he sold that flat, and he's repurposed that money into remote investing. He's now got 11 houses from that same pot of money he had. So that one flat was giving him £780 a month, and now them 11 houses is giving him closer to £6,000 a month. But one part of it, so what we done, we bought 4 houses for cash, refinanced them, and then bought a portfolio from somebody. Bought 5 houses. I think this portfolio was bought for £380,000. In my area, around here, the closest place I would buy a property, that would be an easy, I'd pay more than that for a HMO, if not maybe around that. And he got 5 houses for that £380,000, which for me, in my head, was equivalent of a HMO anyway. He was getting £500 per property, which you'll get roughly £500 per room if you've done it at a 380 sort of standard around where I live. And you're kind of getting the results from a HMO in a remote area, which is high yielding areas. So it depends where your single lets are. So there's so many variables on it. But the answer, as I said, to this is understanding what your property why is. Why are you into this? What do you want from it? Don't exchange higher income for higher stress levels and things that you ain't willing to do and the time it put in there. And always understand there will be a crossover point where you have to find your manager and go through a bit of pain and a bit of extra input to get back to that point where you want to be. So if your point is that my property wise live on my terms, but I understand every now and again I'll dive in a bit deeper, and I know it's going to take a bit more of my time, a bit more effort, but then I can pull back once I've systemized that. But there's a trade-off through systemizing that, finding the right team members, and there's a bit of pain getting to that point. But I enjoy that. I enjoy the challenge of that because it suits my why and my property why. But once you understand what your property why is, to understand that, also there's a thing I call your IQ, and this is not your intellectual quota, whatever the abbreviation is for that, not your IQ test, although IQ and understanding things like this might come into it, but this is your investing quadrant. I've modeled this from Robert Kiyosaki. So I feel there's 4 types of investors. So you've got a hands-free, part-time solopreneur and entrepreneur. So your hands-free is somebody that don't want to be into property but just wants the benefits from it. So they find somebody to do it for them, they pay them to do everything, they build their portfolio, they manage it, and that's it. It's a hands-free, and they love their job they're in or their business they're in, and they've got no interest in property apart from the returns it give them. A part-time investor is somebody that does it on the side. You've got a great job, you might work for Google, you might work for Expedia, and you start doing this on the side. Like, you don't want to give up your job, but you still want to view some properties. You enjoy it as a little side sort of hustle thing. So that's a part-time. A solopreneur is somebody who's full-time in property but does pretty much everything themselves. Might have an assistant or VA. They do everything themselves. Entrepreneur is somebody that creates a business out of it. So knowing which one of them you want to be first of all is really critical for structuring out. But if you want to get to entrepreneur, quite often you need to go through all 4 quadrants, or at least the 3 of the quadrants to get there. And you need to go, it takes some pain, effort and trade-offs to get to the entrepreneur level. So it's not for everybody. So a lot of people get trapped in solopreneur when they want to be entrepreneurs because they just can't outsource, or they don't want to take a little dip and go through that pain barrier before they get there, or they've got the mindset of I can do it better myself and I can't find people, because it's difficult to find people to outsource things to. Or some people might be stuck in the part-time part because they're not brave enough to give up their job, and it's because it's that regular income, and property is far from a regular steady residual income. But that's another thing to think about, George. Single lets is the most residual income out of all of the strategies, especially house single lets. So 3-bedroom houses, 2- and 3-bedroom houses is the most solid income, reliable income you'll get from all the property strategies in my view. HMO's got higher turnovers, higher maintenance, service apartments have, all these other strategies are a little bit more unvariable. Flats have got a little bit more turnover, so you tend to get the longest term tenants in that. So if it's stability you want, again, this is where you'll be with that. But understanding your property why, again, questions that you can ask yourself. The power of your questions, as I said, ultimately dictates the power of your results. So this is a thing called Ikigai. So I've put this together in my thing here. Ikigai is a Japanese philosophy, and it says what you love, what the world needs, what you can get paid for, and what you're good at. And I've adapted this to help people find out what their property why is and find out what they should be doing and where they should be in their quadrant. And I've added some questions to this philosophy, and I've read the books on this. I love the philosophy. So basically, question number one is, George, ask yourself this: can you see yourself doing this in 5 or 10 years time? You can do things at a stepping stone and get you. I can't see myself building systems and teams in 5 or 10 years time, but that's why I'm building them, to know it relieve me, to have my joy. But can you see yourself being a HMO manager for 5 to 10 years? And if you can't, then the answer is, you need to either not do it or find a way to systemize it to get somebody else to do it. But it will be a pain. Or find a really good manager and find a system of finding a good manager, qualifying, disqualifying a good manager. The second question I ask people is, does it give you more energy than it takes away from you? That's a really critical question. So will something energize? Will you wake? Anything is challenging. Everything will give challenges. Even the stuff you enjoy comes with challenges. It's impossible to not have them challenges. But does it give you more energy than it takes from you? If it don't, then there's a real indicator to whether you should be doing this. And by the way, you can do something that you don't enjoy, but you've got to have an end goal. These questions get you pre-framed to have them end goals to get out from doing that. So you say, okay, it's a stepping stone. Like rent to rents are great for stepping stones. Got out my job now. If you want to get out your job and want to be full-time in property, got out my job now, got an income. Now let's start building assets and start bringing my own income. But you've got to understand there is a trade-off. It's a hard strategy to master as a newbie. Single lets are much easier. But if you really want that trade-off, get out your job and you understand the trade-off, it's a fantastic way to approach that. Number three, is there a need for this? There's no point doing a HMO in a village that there's no demand for it, or an area that's oversaturated, or if you want student lets, not being in that area of student lets. If you know, you've got to make sure there's demand for the service that you want to give. Can it be profitable? Number one thing, some HMOs are just not profitable. It's not in the right locations, or the demographic of the tenant just too much management, and they don't become profitable. I had a HMO that wasn't very profitable until I'll end up letting it out to a housing provider that worked with vulnerable tenants, and it was not profitable up to this day. Like maybe give me a few £100 a month, and I was like, wow, should have just had a single let. I got all the hassle of the bills and everything, and it just weren't profitable. Partly to do with my management, and partly to getting it in the wrong location and rushing into it. So there's variables that you've got to understand with this. Number five is, does it suit your profile? We've all got different profiles. As I explained earlier on in this video, my profile is, I like excitement, I like doing things, but I get bored quickly. So HMOs or commercial conversions, I've done one of those as well. I generally get bored before they've finished, and they had to all the compliance stuff that you get to it. I'm looking at them again now because I've built a big enough team, a big enough support network where I can outsource them parts to people whose profiles are better or like that. But you've got to see where you are in your journey and know what your profile is. A good little test on that is a thing called Genius U. So if you Google Genius U, Roger Hamilton, it's a free test. It tells you what sort of profile you are. Einstein and loads of these greats said there's 4 different types of profile of people. He does an in-depth version that you pay for. You can do these psychosomatic tests. I do it when I hire people to make sure we're getting the right match profile for the right role. The paid version, I think, is $50 at the moment. It's half price, or $100 if it's not half price. Really worth doing, but even the free version's worth anybody having a little play about with that. But know your profile, know it suits you. Does it suit you? And the 6th question is, will you enjoy it? Will you get some satisfaction from it? For me, I don't enjoy managing tenants who's moaning about somebody's not done the work. This is happening in the HMO we've got at the moment. He's not doing the washing up. He's making too much noise. He plays his music too loud. There's socks on the radiators, and I don't enjoy that, but ultimately we've got a manager in place to do that. But that took a lot of pain and losing a bit of money in the meantime while we wasn't getting it right, and to get to that stage of that. And still now I know we could lose a few tenants and go for a bit of a void period and have trouble getting him out. So I understand the trade-offs. But them 6 questions are key. It's your Ikigai. Maybe take a screenshot of that. You might have to reverse that around. Understanding your Ikigai and what your purpose from it is really critical when getting into property. So when you go around to these seminars, it's very easy to get shiny penny. Commercial conversions look great, service apartments look great, but make sure it suits. Ask yourself them questions to make sure it suits you, and make sure it aligns with your mission and your goals. A lot of people get into property because they want time and freedom and passive income, and then get rent to rents and service accommodations and self-management, and they're far from it, and they end up digging themselves into a bigger time trap than anything, and time's our biggest asset. It's something that's not renewable. You can buy another house, you can buy another car, you can do anything again, but you cannot never get time back. So really important to understand your property, why you're getting into it. So the answer is a little bit of a controversial one, I guess, and you probably might think it's sitting on the fence, but the answer is find out what you want from it. And George, what you've told me so far tells me that single lets will suit you. So the tortoise wins the race. And as I said about with single lets, if you can buy a refurbished remortgage and build up enough of them, you have the equivalent of a HMO. I've done the 1 hour rule in my first apartment, and I bought a place right in the middle of a prostitution area with heroin addicts. And I didn't know that. Street looked alright, agent told me it was good. Then I've invested 4 hours away on my first 2 deals was close, and my next 3 deals after that was 4 hours away. And the key behind that, tech now makes it easier, but the key behind that is I met someone from the area, which was quite lucky. He had over 70 properties in the area and moved down to my location, but he broke that rule for me. I was like, wow, 1 hour rule. I went to within 1 hour, so I grew up in a village, and it didn't work in the village I grew up in. I was born in the greatest city in the world, I call it London, proud to be born in our capital, but I grew up in a little village called Harvey, and it just didn't work. And without any education, I went for 1 hour away. And Southend is a good investment spot, especially back then it was, but I got the wrong area. I didn't know it no better than I knew 4 hours away. In fact, I knew that 4 hours away much better because I met a guy from there. And then I got the HMOs, as I said. I got 3 properties that all worked great, all rented well, all bought refurbished, remortgaged. He supported me with the network and the area and the understanding. Of course, there was areas like the area I had in Southend up there, but he guided me away from them. Then I got confused on the HMO, realised it cost too much money, and raising the finance and the JV finance for that was a lot harder than raising 10 to 15k JV partners and attracting that finance in the ones in the north. And I made it work. It does work. Of course, it comes with trade-offs, but yeah, sorry, Paul, to be there. And I love people's opinions. I love triangulating, but it definitely works. I've seen it work for a lot of people now, and technology, you can do anything you can do in person can be done virtually. So meeting that person like I met was a bit lucky for me, but I still clinged on to that luck. I met him, he had over 70 properties, done over 100 deals in the area, bought and sold and built, and I clinged on to that, and I built that relationship with him. Today, building a relationship and finding somebody that can guide you in these locations is easier than ever. Just go on these platforms. Theo said hi to me earlier on. I met him for here. Theo see I was coming to his location, which is my remote area. He's in Middlesbrough, I'm in Stockton, and he buys in Stockton. And he's like, I'm from the area, why don't we meet up? And now me and Theo are fantastic friends. And even now, if I buy in Middlesbrough, I'll say to Theo, what's it like what's this road like? No, stay away from that one, that one's good. It was as easy, but not as easy as that, but it is easier than understanding. I've lived in Brentwood for 7 years, and I could not tell you the best streets or the worst streets for investment here. They're all worst streets for investment here for me, because a terraced house will cost you like £400,000, a flat will cost you £300,000 and give you a 3 or 4% yield. So they're all bad streets for me. But either way, I couldn't tell you the best parts. Just living somewhere don't qualify that. And not everybody's. If you live in a location, especially because single lets, I agree, you should cut your teeth on them. If you live in a location where single lets work, where the yields are over 8%, the purchase prices are under 100k, and it gives you all the protection, then stick within an hour, or if you can find a place within an hour of that. But if you don't, definitely evolve your ideas and look to new locations and use technology as your friend. I've built a massive network in the northeast, in Stockton-on-Tees, and a lot of them has come through. Even me just mentioning I'm going to that area, Theo, Chris, loads of these guys reached out to me, and then we met up and we've got friends, you know. So it used to work, Paul, and I'm sorry to challenge your thing, but it definitely does work within an hour. I've seen it work with people. I work with people it does work with, and again, it depends on where you live, where that hour is. And if you live in a location that already works, or if you've already got a foundation, like say you bought loads of properties 20 years ago in London when they was affordable, the barriers to entry was lower and the yields were good then, and you've experienced the uplift in capital gains and the rent, then yeah, you can stick within an hour as well. But yeah, it depends where you live. I've not got it at hand here because it's in my bedroom. I'm going back over it. When I like a book and I get a good book, what I'll do is I'll read through them and I'll put loads of little marks in it, and I'll go back over the part. At one point, I sort of make notes, and it take me 6 months to read a book. So I read through it, put little stickers on. I use a bookmark. This is a bookmark for it. You can see the stickers. So I use this as my bookmarks, go online, pack of notes, and as you're reading, instead of making notes, you just put a little sticker next to the point, an arrow, and if it's a bit more of a note you do want to make, as you can see at the top here, I've got that, you make a bit more of a detailed note, and then you go back over them points when you go back through the book, if it's a powerful book. EKI was one of them books, and yeah, I've been going back over it at the moment, the points that I stuck out last year that I read for it. Tech's made it so possible now. Yes, it comes with trade-offs. Yes, it's ideal to be on the ground some time to time, but the trade-offs for having single lets are high yielding and give you that foundation. But guys, remember, this is the All About Property live show. It's approved by OS. OS, I'm still waiting to see what your views are on going with HMOs. Again, I go back to it, find what your property is. There's definitely a trade-off. HMOs are more difficult. I don't advise them for your first thing, but it's not a no. If you want to do rent to rents and get out your job, then figure it out, but always know the trade-off what you're doing. Same as when you do a bet that's a bigger gamble, mate, you know it's that bigger gamble. No, always look for the downside and make sure you can protect the downside if it goes wrong. Like don't go for a HMO, it could potentially bankrupt you. Going for 100k worth of refurb and you've got their numbers wrong and it's 150k and you can't get the development finance. Always make sure you can afford the downside, and this is why building up single lets gives you a education of how to do refurbs and understand them, but also a residual income to protect the downside of the bigger projects. But yes, it can be done from the start, but realise there's a trade-off of initially you might luck out and find a great agent straight away. Easier to find agents today. Go into groups, ask questions, ask people, but definitely a bit more of a trade-off. And I'm finding a lot of time now the money you plough into them, as I said, if you was a bit patienter, you could plough them into single lets, and by the time you've got the same amount of single lets for the money you put into the HMO, you'd probably be on a similar income, especially if you live in an area that's high yielding single lets, fantastic. If you don't and you follow Paul's advice and go more than how away, the income you'll get from them, by the time you account for the voids, the turnover, the tenant fines and all the stuff that goes with HMOs, is very, very similar, you know. It's not far off, not on all of them. Some of them do work really well. Theo's got a great one that works really well and gives a much higher return on what you put into that. But if we could find hundreds of them, that'd be great, but you just can't get hundreds of those, but you can get hundreds of single lets, you know. So find out what you want from it and get a balance from that. Hope you found it useful, guys. This is the All About Property live show. As I said, it's dedicated for this. If you've got any suggestions about live videos, put them over, or there's a comment in there that you'd like us to cover and make a discussion. Thanks for everybody that's joined in with these discussions. This makes it really much more valuable for everybody and makes it much more enjoyable for me. As I said, these are just my opinions, but this opinion I think is a bit of a fact. Find out what works for you, you know, don't just chase the money from it. And George, I think you was already toying towards there anyway, but yeah, as I said, if you did toy with it, George, with what you've said so far, you definitely need to find somebody either you JV with or a manager that you can outsource it to. There'll be a trade-off for that, and and you need to qualify them and find them correctly, but that's probably the route you'd want to go down from what you've told me so far. But as I said, All About Property live show. I will see you next week. It's approved by OS for the admin, so hopefully that we don't get this knocked down. And send over any suggestions you've got or anything you want to discuss with this, and we'll do it. OS has even said it's okay if somebody wants to jump on and jump on a split screen and we can do a Q&A. I'm happy to do that, but feed them over, keep on making great content in the group and contributing towards that, because the great content is what makes these videos every week, and you make it easy for me. So thank you guys for that. As I said, if you don't evolve your ideas, you'll never live on your own terms though. So evolve your ideas, live on your own terms, and have a fantastic weekend, everybody.